Hi there, a very good morning and good evening to all of you, depending on wherever you're watching me. This Simply Stocks, and I'm live in this live session with you all, and hopefully, you all are doing well. And this session relates to the current market environment at the moment, and let's just discuss about what lies ahead with the Fed meeting and where are we headed going forward. So, we'll discuss about all these factors. First of all, a disclaimer that this is not a stock recommendation, and people taking any position to any share that I talk about should do that with their own due diligence and research. And I'm not in favor or against any company that I talk about. And also, I'm not a portfolio advisor officially, and I'm not an NSC or BSc member, so kindly take that on note. And hopefully, you understand that. So, all the disclaimers apply. Whatever I discuss here is for educational purposes, and kindly take everything according to your risk appetite, and take a call only after talking to your you can say financial advisor, and only then take a call on any stock that I discuss here. uh, so having said that all, we get the sessions begin in earnest. Things are not looking that great. That's what I feel, and things are getting worse by the day. So today was a green day finally on the Nifty, and things started to move. But whether this will sustain or not, this is what we need to probably ponder upon at the moment. I have a feeling that going forward in the next 1 week or so, most of the selling should be done and dusted. That's what the screen is telling me. That is not to say that we are going to be in a roaring bull market, but there are signs, there are signals, and there are data points that tells me that we are very close to a bottom, if not making a bottom. So where would Nifty head, where would Bank Nifty, etc. would head. I'm not going to get deeper into it, but even if there is selling, and even if the market goes, say a Nifty goes 2-3% lower, there will be heavy buying that would come in. Why I say that, there has been you can say data out with respect to SIP flows, which have reduced sharply compared to the last 3-4 years. There has been data out that people have moved out of the market completely. It has been a complete mirror image of what used to take place, say 18 months back, when everybody was getting into the market. And so all these sentimental things do matter. Now that doesn't mean that the market is going to just go up tomorrow, and okay, everything that is geopolitical in nature, or what is happening in America with banks, etc., is going to go away in a jiffy. That is always there, but sentimentally speaking, we are at the lowest point probably of the last 18-19 months. Yes, there is downside in the market. I won't rule out even 16,000 on the index, but I don't think that will stay for long. So if you saw today, the market went down for the last 4 5 days sharply, and today there has been short covering. Nothing else. There's been short covering. No fresh buying. I don't see fresh buying, because if you see, strong stocks did not perform that well, and weaker stocks performed exceedingly well. Absolutely, we were in a situation of seeing short covering. Now two things can happen from tomorrow. One is that again at 17,100, etc., people will go big time short, and again the market will go down 300-400 points and eventually close at the lows. That's one point. On the other hand, there could be a situation where fresh buying might come in the second half and below 17,000 levels, and then that would be the test of the market. So basically now the test of the markets begin, whether the second round of selling that will take place from tomorrow onwards, or probably next week, whether that can be absorbed, and people do buy into top quality companies. So that is to be seen. As far as what is happening in the US, Fed needs to do a lot of things in order to get things back in, you can say, back on the road, because they went behind the curve first, and they have now gone ahead of the curve, and they were never with the curve, and they never do that. So over the last 15 years they have made mistakes, and we have come to a point where we are probably paying the price for all the rate cuts and QE, etc., that were taking place. Eventually they had to increase rates, and they did not. They deliberated on it, and probably spent time on it, and eventually they started doing it. Then they found out that okay, what we are doing is extremely slow, so let's increase the pace of it. And we are seeing smaller banks go under because of that. So at the moment I feel, in my personal opinion, Fed will increase rate, and will increase rate by 25 basis points. I don't think they have any other option with 6% inflation, but they might say that now probably the rate increase may not happen for a couple of quarters, and we'll see the data points. They might shift the goalpost from 2% to 3% inflation, etc. They might say that we will increase but not immediately, and we want to have we don't want systemic risk, etc. So commentary will matter, but at the moment what is happening is that no matter what the Fed says, by 22nd, 23rd of March, we will have massive selling. So next week, we could be uh, in for more volatility and selling. By the way, talking about volatility, the India VIX index is only around 17, so it's not at 25, 26. At which point I would say that the market has completely bottomed out. So we are still probably a long way to go from there, but you never know. Over the next 3 4 days we'll see very high volatility, and eventually the index do go to 24, 25. So my opinion on the market per se, and my opinion on the overall, you can say, scheme of things is that the market, first of all, in the very short term, in the next week 2 weeks, may be extremely volatile, even more than what we have seen at the moment. And with a downward bias, we could go to 16,500, 700 levels, but we may not go there, but still be volatile. So we'll have a situation where the market will open up, there'll be massive selling, and then midway through the day there'll be more buying coming in and short covering, etc. This may continue till 22nd, 23rd, and probably from next Thursday onwards, with the expiry looming. I think the expiry is not on the 24th, sorry, not on the 23rd, but on 30th of March. So what will happen is, from Thursday, Friday next week, we will finally have some sort of stability in the market, because no matter what Fed says, eventually market will move ahead and digest that in a day or two, and move on. So probably from 27th of March, we will see, Monday 27th of March, we will see some stability on the market. Maybe a bottom, maybe somewhere a sideways movement will begin. That is for the shorter term. From a medium term point of view, stocks which have gained traction, stocks which have done exceedingly well over the last 3 months in the public sector enterprise segment, in the oil and gas segment, in you can say infrastructure, capital goods, even mid-cap stocks in that field should continue to do well. Some white goods companies may also do well, depending on which one you buy into, consumer and white goods, but very few are there. But overall, the space of infra, railways, etc., that will continue to perform. So next 2 3 months, that is where the focus should be, because once this thing settles down, I think those will be the stocks that are going to really run up fast over the next 2 3 months, and then probably we'll have another round of sell off. Because why I say that is, on the longer term time horizon, say from 1 to 2 year perspective, I am not that gung ho about the market. I don't see new highs being made convincingly. There's a chance we could go to 18,800, 18,700 levels, but I don't see we taking out 19,000, taking out those levels, and you can say in a situation where the market ends up, you'll be missing out a lot by not buying into the market. That will not happen. You will get you can say corrections, big time corrections, in which you can accumulate the stocks, You will get big time rallies in stocks in which you can make 15, 20, 25%. So if you are a you can say momentum trader, you can make money. If you are a long term investor, you can definitely find opportunities to buy into. The problem will remain with intraday traders because the volatility will be at its most over the last 2 years that we have not seen over the last 1.5, 2 years. So we have seen that during the pandemic, but after that we have not. So I think the volatility may remain up for the next 6, 8 months, and we need to be in that you can say phase and make money. If we are, you can say, the only people, the only avenue for us to make money is in the market. If you are an investor, these are the best times to buy the best in business stocks, top notch stocks at very attractive levels from a 4 5 year time frame. But from a 1 year time frame from till you can say December Jan next year, I don't see the whole index, whether it is a particular index in any sector or the small cap or mid cap or the Nifty outperforming a lot. We have to find pockets in order to make money into the market. So basically, that's my take. I think these kind of volatile moves or heavy downside moves may just end over the next 4 5 trading sessions. But we will eventually be in a range. So what could be the range? In my opinion, the range could be, if we fall to 16,500, then the range would be between 16,500 to 17,500. If for one reason we have made a bottom around 16,800, which was today, then the range could be between 16,800 to 17,800, until and unless we settle around 17,500 for a long period of time and we take out the 200 DMA. We will not have a sustained big rally. We will have short rallies and you can say stock specific rallies of 20 30%. But eventually, to have that consolidated rally of all the stocks and everything in the market, you need to have the index settle above 17,500 comfortably. Once it does that, then you will see the rally takes place. So that's about the market. I think the market pain, which has been there for 18 months, on March 31st, it would be 18 months. It started in early October and it's going to probably not culminate well. So this is also one of the reasons that normally this bear phase in mid and small cap is around 18 months on an average. I have a feeling that with a last round of selling over the next 1 week, which could be very painful, in which a lot of players would just vanish from the market, eventually we are headed much higher from April onwards. So this is the best time for portfolio makers, for those who want to build portfolios from 4 5 8 10 year perspective, to pick up stocks in every domain and make money from them. Okay, so all right, guys, I'm ready to answer your queries. Kindly use the super chat and super sticker feature. That will help you grow a channel. That will help you also ask me questions and eke out answers in greater detail. So we have some questions coming up. Can I buy Aurobindo Pharma for long term? Yes, decent company, but I would suggest stay away from you can say export oriented companies. And even if you want to buy into, you can say, pharma, then better stocks would be something like a Divi's or Dr. Reddy's, Ipca Labs. Those are better companies, but I would prefer buying India centric companies because of the kind of situation we are faced with globally. Okay. So Random Electra Green is a decent company to invest from a 8, 10, 15 year perspective. I made video on it. You can go ahead and watch it, but not as a trade. So a disclaimer, I have the stock in my portfolio, but I won't say that you buy just purely because somebody has it, etc. Do your own analysis and take a call, but it looks like a decent company to be part of. Uh, okay, what else? So Sumitomo looks decent, but you need to understand one thing. Monsoon in India has been pretty good for the last 4 5 years. As long as I remember, I think 5 6 years, and this has been a biggest trail of monsoon being fine. Now there are talks of this year having very low level of monsoon. Now that will have a direct effect on many of these agri stocks and probably will have a pretty positive effects on white goods companies, AC companies or beverage companies. So you need to take that into perspective. Even for long term, agri companies are not that great to be investing into. So Kelp's decent company, and one can definitely look to accumulate at these levels, but how far can it go? How quickly? Because there has been 3 years and no movement in Kilpe so far, but that happens with smaller companies or small cap companies. What you need to do is put in only 2-3%, maximum 5% of your portfolio into such stocks, and then probably hope for the best. What else? Map My India for long term. Decent company Nagaraju, but they are finding stiff competition from free, you can say, apps which produces these maps, say Google, etc. So they are, I mean, finding it tough at the moment. Let's see how the numbers pan out. But if you have not bought into the stock, these are decent levels to get into. See, InfoEdge what I can say is that from a long term point of view, these are good levels to buy, but I think new age companies may just continue to struggle for the next 6-8 months with the kind of situation that we are faced with respect to liquidity and finance. This is something you need to understand. Ice Make Refrigerant is a decent company, but last 2 quarters results have not been exceptional that they used to produce. So wait for March quarter results and then take a call on Ice Make. Okay. So that's the call. Another thing I want to mention here is that there are companies, as I mentioned, into other spaces than consumer, where money could be made even from a long term point of view. In fact, more from a long term point of view. Uh, Over a 3-4 year period, these companies could be extremely big into infrastructure, capital goods, ancillary, and all these kind of sectors, say railways, etc., because of the kind of orders that these companies are continuously getting. Do you have any companies with high PE ratio? How do you analyze PE ratio? So travel PE ratio is a very interesting thing altogether. I analyze them in a probably a different way. I take it that PE for each industry is different. There are around 20-25 industries, and each industry the average PE. I take in the average PE, and these I mean. The PE is different for average PE is totally different for every sector. For example, in and I made a video on it as well long back, so you can probably go back 1-2 years and then you'll have a video in which I have discussed about PE for each sector. Now, in the case of textile, for example, the PE has a range of 3 or a 4 PE up to 12 to 14. So if I get a stock in the textile space with the bull run in textile with a P of 7-8, I can write that for a P of 11-12 and then exit. Similarly, say in the agrochem space also the PE is extremely low. It's between 12-15 to maximum 18-20. Again, if I find some stocks in that range in the agro space, I do play it. So that's the thing. So PE basically is a factor of what the company is doing, how much is the growth, and how much is the market willing to pay for that growth. So if it is a consumer company growing very fast, we have seen how DMart has been priced at 120 PE. But if it is a company in the textile space which has not doing that great, may have a PE of 7-8. Okay. So that's the call. So PI Industries is interesting again, from the, you can say, the agrochem space. I'm not quite very positive about the agrochem space at the moment. I still feel that we could be headed lower because of the El Nino effect and everything. So we have to look at it. But yes, if you ask me in this space, UPL, PI Industries, Sumitomo, all are pretty decent stocks. Okay, guys, thank you. Thanks a lot for being online. Please like and subscribe my channel, hit the bell icon so you get my videos straight away when I post it, and kindly support me on Patreon. Thanks a lot for watching.